All right, hello everybody. Saturday, April 22nd. I want to talk about some stop orders, what stop orders are, how they can help you. If you are someone who actually recognizes what song these lyrics come from, you are dating yourself. I do. This was a big song back in I think the late 70s. But we're going to talk about stop orders, and this is kind of apropos, if you don't mind if I use the word. Stop right there. I got to know right now, will we go any farther? Now, I'm not going to tell you what the song is about. I'm sure you can Google it. Uh, but I just thought it just popped up in my head when I thought about talking about stop orders. All right, so what is a stop order? Stop stop orders are kind of counterintuitive to people, but there's a logical reason for them. Now, generally, people would like to buy something at a discount. It's trading at 10, you think, okay, I can buy it at 9.50. That's great. I bought it at a discount. The opposite is true if you're selling. Something is at 10, if I can sell it at 10.50, that would be great. So most of the time, people either buy or sell whatever security it is, whether it's a crypto or a stock, regardless. They either buy it kind of right around where it's trading, or they place a buy order below the market, hoping to get it at a discount or acquire it at a discount, or they place a sell order at a premium above the market or a level above the market, hopefully hoping that they can get a premium if the security gets there. Now, buy stop orders and sell stop orders are different. A buy stop order is a buy order that is placed above the market. In other words, it's at 10. I don't want to buy it unless it gets to 15. I'm going to use big numbers here just to try to get the point across. Listen, this thing's at 10. I have no interest. If it gets to 15, then buy it for me. Now, people would say, well, why wouldn't you just buy it at 10? Why would you buy it at 15? Sell order is the opposite. Trading at 15, I don't want to sell it here. Sell it if it gets to 10. And the intuitive thing is to think like, why would you sell it at 10 if you could sell it at 10, 15? Now, here's the thing. And this example here of IBM with this clear resistance level and clear support level, I think is a good way to illustrate why people use buy stop orders and sell stop orders. What is this blue level here? It's called resistance. What is resistance? It's a large group or concentration of sell orders or investors who want to sell placing their orders at or close to the same price. So when a market's going higher, there's not enough supply to fill the demand, but when we get to a resistance level, for whatever reason, the sellers come out of the woodwork and they put a top on it, and a lot of times the market goes lower. And this happens because some of the investors who want to sell realize that there's other sellers coming to the market. That's why the price has stopped going higher. And they start to get worried that they're not going to be able to get their order off. In other words, if there's someone who's willing to sell at a lower price, that's who the buyers are going to go to. So they reduce the price they're willing to sell at. And then someone else sees that and they think the same thing, and so on and so on and so on. And you get this snowball effect. All right. So a lot of times when we get to resistance, the sellers overpower the buyers. Support is the exact opposite. It's a large concentration of investors who are trying to buy at or close to the same price. When the market's going lower, buyers are waiting, or investors who want to buy are waiting, waiting, waiting. All of a sudden, it stops going lower. And some of these investors start to think, gee, there must be other investors around who want to buy. That's the reason why the price is not going any lower. So they want to have the highest bid in town because if there's another investor who's willing to pay a higher price, that's who the seller is going to go to. Why would you sell it at why would you sell it at 10 if there's someone who's willing to pay you 10 and 20 for it? So the reason why things get to resistance and reverse or get to support and reverse has to do with market psychology. Now, I don't want to get too into market psychology tonight because I have those lessons on my website, and it's probably the most important thing about most important thing to understand about trading, but we're going to talk about stop orders. Now, why would someone place a buy order above the market? Why would someone not buy it at 125, but buy it if it gets up here to like around 133? Well, the thought is this. Markets are all about supply and demand. And as we've seen at a resistance level, in this case, let's just call it, I don't know, 132.50, there's more supply than demand. Well, if the price gets above that, it tells us something. It's not just symbolic. Traders call this a breakout. It tells us that the investors who wanted to sell have either finished or canceled the order. There's really no way of knowing, but regardless, they're out of the market. I don't care what market it is, whatever business you're in, whether it's the stock market, the real estate market, selling lumber, selling shoes, it doesn't matter. When you take supply off of a market, the demand side, or the buyers, supply being the sellers obviously, the demand side has to start paying higher prices. Basic economics 101. Supply and demand. If there's less supply, the demand people need to pay higher prices. So the thought with the buy stop order is that if we get through this wall of sellers, we're just going to keep going. If we're below it, it could get there in reverse again. So the buy stop trader places the buy stop order above the level. And it's almost like, all right, well, if it gets to this wall, it might bounce back a couple times, but if it finally breaks through the wall, it's going to keep moving. Now, as I'm sure you can probably imagine or assume at this point, a sell stop order is an order placed below the market. Is the exact opposite. What is a support level? Well, a lot of investors who want to buy. If the price gets below that, we call that a breakdown. It tells us that the investors who wanted to buy have left the market. They've either canceled or finished their orders. So basic economics 101, once you take demand off of a market, the supply side or the sellers may be forced to offer their shares out at lower prices. And that forces a new downtrend to form. As long as it's above this wall of support, well, maybe it gets down there and bounces again and bounces again and bounces again. The sell order is like, okay, the wall is broken. The sell stop is like, all right, the wall is broken. We're going lower. I'm getting in there. So this is the concept of what a buy stop order is and what a sell stop order is. Now, they're not necessarily placed above resistance and below support. This is a common use for them, but someone might think something's in a downtrend. If it keeps trending lower, below whatever this number, then I want to sell it. Or if it keeps going higher, then I might want to buy it. Like, say you're a short seller and you sell something short. Well, you're going to make money if the price goes down, but you're going to lose money if the price goes up. So you might say, all right, I'm going to short this stock at 50 and I'm hoping it goes to 40. But if it goes to 52, I'm going to have a buy stop order, a buy order above the market that will buy back the stock I shorted and lock me in with a loss, but at least it's a small loss. Same thing with a long order. Okay, I bought it at 20. I think it's going to go to 30. If it gets there, I'll sell it, but maybe I'm wrong. If it gets to 18, I'm going to sell it. So you buy it at 20, and if things don't go your way, you're going to sell it at 18. So there's different reasons for using these buy stop orders and sell stop orders. They make sense. There's logic behind them. Now, just before I go, one thing to think about is there's a difference between a buy stop and a buy stop limit, or a sell and a sell stop limit. A buy stop triggers the order. Okay, a buy stop triggers a market order. If it gets up to your price, you're going to buy it at whatever the best price is. If your buy stop is at 132 and it gets there and the next trade is 133, you're going to pay 133. If your sell stop is at 123 and it gets there and then it gets to 122 on the next trade, you're going to sell it at 122. A typical buy stop order or sell stop order is the buy stop or the sell stop triggers a market order. So people have been burned by this because if something's moving really fast and breaks through levels, they get a much different price than they thought they should. If something's collapsing or something's skyrocketing, the price that triggers your order could be very different than where it gets executed. The other thing to think about is the buy stop limit or sell stop limit. A limit order means you're not going to just buy it at whatever price you can, or you're not going to just sell it at whatever price you can. A limit order means you're going to sell it at a maximum or minimum price, or you're going to buy. I'm sorry, let me say that again. A buy limit order means you're going to buy it at a maximum price. A sell order means you're going to sell it at a minimum price. Say you have a buy stop order of 133 buy stop limit. Well, it gets to 133, that triggers your limit order. Next trade is 134. Your order is not going to be executed. You're going to be sitting out there with a limit order in the market, right? The market goes to 150. Well, your order is not going to be executed. You have a limit order. That's the most you are willing to pay. Obviously, the opposite is true. We go lower. You have a sell stop limit at 123. It hits 123. That triggers your limit order, but the next order or the next trade is 122. Well, now you have a limit order. You're at 123. You're telling your broker, hey, I'm not selling it for less than 123. Then it goes to 115, 110. Your order is going to stay out there. So just remember, a buy stop is a price level that triggers an order. It could either be a market order or a limit order. And you could just check out more about this on our types of market orders. A sell stop gets down to a level, this sell stop price is the trigger. A trigger is either a market order or a limit order. Okay? All right, everybody, that's it. I hope you all have a nice day. Thank you for checking out our site. Please subscribe to Stock Market Jobber or subscribe to us on YouTube. And I will see you soon. Thank you, everybody.